Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well on this fine Friday. If you're new here, every single Friday I break down the latest news and the hottest topics in the world of cryptocurrency and technology whilst enjoying a cup of delicious coffee right here. In today's episode, we have our normal dose of Bitcoin today, a game-changing Chainlink feature that no one is talking about, Reddit's new cryptocurrency, and of course our usual 404 Logic Not Found segment that everyone loves. Now, like we do on the show every single week, let's kick it off with some questions from the community on YouTube and Twitter. So I'll head over to the good old iPad right here and get started with these questions. But if you want one of your questions answered, make sure that you leave them in the comments below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel, hit that little bell notification button so you get a heads up whenever new content hits the interwebs. Before we get started with these questions though, trying to crush my third cup of coffee for the day. Awesome. So the first question here is from Duran. It says, in the early days, hard wallets made total sense. Now, after many exchanges have gotten legalized and regulated, having hard wallets is like hoarding your green dollars at home. Because you're afraid that banks will go bust. Okay. Besides the 250K limit over your money on American exchanges like Coinbase and Uphold, I bet many people would rather sue Coinbase for their stolen coins than wondering who stole their hardware wallet. So ultimately, this is interesting. And I know it's not really a question, it's more of a statement, but I thought I wanted to address this one because I get this a lot. People say, well, insurance on Coinbase and Uphold or other exchanges, including crypto.com, etc. Oh, it's plenty to protect what I have. I'm not really worried about it. I'll just leave it on the exchange. And I totally understand where people come from on that. The reality is, though, there's fine print that you probably aren't aware of that might exclude certain instances where insurance doesn't kick in. There also might be exclusions for what's covered versus what's not. And, with Coinbase, for example, only your fiat money on the exchange is covered, not the crypto that's sitting in their wallets. And so you're really not safe leaving your crypto on Coinbase. Ultimately, though, it's about control and custody. It's about the fact that you, as the owner of a hardware wallet, only have to keep that device somewhere safe in your house, which shouldn't be too much to ask, and then to use a secure PIN. Basically, that's all you have to do. Storing dollars and gold bars inside your house requires probably special equipment, a vault, and a lot of space. But a hardware wallet, like this Trezor Model T right here, really doesn't require a whole lot of space to work with, and it's super easy to keep safe. Obviously, this is just sitting on my desk, but that's because I'm sitting here. Ultimately, the reality is that there's a big difference between cash and gold and other physical things and cryptocurrency, because all you're protecting is digital keys that give you the rights to move and manipulate those assets. Now, I guess the difference now is that people are still getting used to the idea that you can do this and you can be a custodian and protect your own assets at home like people really want to do with cash and with gold. It's just a lot more practical to do this with cryptocurrency. So I highly recommend people use a hardware wallet because then you are in control. There's no questions about whether or not you'll be able to access it during volatility. Like Coinbase has been shut down during crazy volatility periods lately. I got locked out of an exchange recently and it took me 2 weeks and I couldn't move my assets. It's a serious bummer, and I think people should always have custody of their assets at all times. Now, Chris asks, for your next Q&A vid, can you talk about how and if you can trade on any exchanges whilst holding crypto on a hardware wallet? Thanks. Also, is Litecoin yesterday's news? Can it outperform BTC soon? So I'll address the first one first. Yes, you can use your hardware wallet as the custodian of your crypto and use exchange features. My favorite way to do that is Shapeshift. They have a great non-custodial way by which you can trade and exchange and manage your cryptocurrencies all from your hardware wallet, like your Ledger Nano X or S, your Trezor. Actually, that's why this is here, because while I'm at my desk here, I used this Trezor to make trades and do things on Shapeshift using their platform. So I highly recommend Shapeshift for non-custodial exchange services. They're unbelievable, and I'll leave a link to their service down below, non-affiliate or anything like that, but you can check it out. And then in terms of Litecoin, can it perform Bitcoin? I don't really think that that's how we should be thinking about it. I think Litecoin has its niche. Litecoin has its core user base and its core people, and that's good. But I think comparing everything to Bitcoin's a dangerous game because they're very different, even though they're both UTXO based transaction networks. Litecoin has done a pretty good job with the commercial viability with some of their partnerships, and I think that they have a quality project and team overall, but I think development's been a little bit slow lately as well. So I think it remains to be seen. I can't give you a definitive answer except for don't compare it to Bitcoin. I think it's too different now. Same with Ethereum. So thank you for your question. Crypto and Chill asks, you talked about the scalability of platforms. Silvio Micheli of Algorand, whose reputable name, says he's solved the issue and Algorand on layer 1 can do 1K transactions per second. Be very curious to know your take on it from a technical perspective. Okay, awesome. So thanks very much for that, honestly. I think you were very kind in this comment. But with Algorand and a lot of other platforms that have done a really good job of trying to scale and secure proof of stake networks and, I guess modified proof of stake in a sense, it's definitely viable and it's good. But a lot of these load tests are done in closed environments. They're done in test nets. They're done with ideal transaction load. The reality is that even with Ethereum, we saw this weakness when we got down to brass tacks and we saw CryptoKitties crush the network. It's because even though from a scalability perspective at a base layer, at a base level with proof of work, Ethereum could handle X number of transactions per second, when the transactions are large in size and every transaction is a new contract, like is required with ERC 721 non-fungible tokens, the whole scalability game changes. And so you have to be cognizant of the fact that when these load tests are done and someone says, okay, we've solved the scalability problem, scalability in tests and scalability in the real world is a completely different thing. So until we see large, bulky data-bearing transactions occurring at 1,000 transactions per second within Algorand, I'm not going to say that they've solved it all. And I also don't think 1,000 transactions per second is going to serve us enough to really move us in the right direction. The reality is that there are services out there that rely on way more than that to just operate on a day-to-day basis. And we are fighting to just match and get close to what's already out there, let alone what will be out there, in the future for technology. So we can't be satisfied within the blockchain and crypto space with just good enough. We have to make it scalable beyond the limitations that we have today with traditional systems, or else we will never reach adoption. So there's a ways to go. Algorand is a high quality project. I have a lot of respect for what the team is doing, and there's a lot of credibility there. But I'm not going to say that they've solved everything because, quite frankly, no protocol has yet. But we will see. I think they have a great model, and they will continue to do great work. Thank you for your question. All right, Sean Coyne asks, great info as always. Thanks very much. My question is about mobile wallets like Trust, Exodus, etc. I can't find much info on their security and what's their vulnerability. How can they be compromised, etc. I know you're a hardware wallet guy, just looking for info on why they're not good long term. So here's the deal. Software wallets, which is what these are mobile apps. They use a private key stored on your device, either using the secure element on a device if it has one, or just quite frankly, leaving it in an encrypted format on the drive of your device, right? So you'll have a password or a passkey to unlock that particular key on the device storage, and that's what's used to sign and send transactions, right? So this is better than using an exchange in most cases. The problem is the average person might not have really that great security. You're relying on that password. It's kind of a hit and miss because it's still a hot wallet. It's still connected to the internet, but you have custody of your assets. So it's kind of a mixed bag. And the reason I say that is because whenever you have a mobile phone, you have the ability for malware to get on it. If you have a screen reader malware, or a keylogger, they can figure out your password. Then they can figure out the algorithm used to encrypt your key, and they can decrypt your key and steal it, right? That's how a lot of times this happens. Otherwise, you have people remoting into your phone and basically just watching everything you do or getting access to the file system. It's tough for me to recommend storing a key on the device, even though most of the time it will be okay. Taking custody is critical, so if that's the way that you have to take your crypto off of exchanges, then that's totally fine. But I would recommend a hardware wallet for bulk storage of large quantities of crypto and use those mobile wallets for daily trading, daily use, which is generally what I do. I really like Evercoin because they have really cool features built in for the send and all the key functionalities for your wallet using YubiKey. I have it laying around here somewhere. I have a YubiKey that I use to plug directly into my phone to enable sending and all those transactions. And in the future, they're going to use that to even encrypt and secure your key in and of itself. So that would actually kind of move the needle on making mobile wallets even better in my mind. So hopefully we see that happening. Thanks for your question, Sean. Zodia, I think that's what your name is. It would be nice if you could explain a practical example about how to send crypto using unstoppable domains. I haven't found anything out there and haven't been able to make it work myself. No wallet seems to understand the .crypto address. Thanks in advance. Okay, great point. So I'm going to show you on screen here me using Coinomi, which is a wallet that does support .crypto domains and .zil domains. I will also show you that Trust Wallet, I think, has also integrated these domains, and there are a ton more wallets coming. I know this for a fact. I don't know what's out there in terms of public information, but there are plenty of wallets coming, and it's a pretty simple integration project. So definitely stay tuned, but I'll show you an example of this here on the screen of reconciling those domains to addresses. It's definitely well worth having a domain. I really love mine. So I have my website and a bunch of crypto addresses linked to it. So it's very effective. Awesome. Thank you for your question. Awesome. Nathaniel Gillis asks, do you think DeFi will be one of the major factors starting the next bull run? Will Ethereum overtake Bitcoin because of this? Thank you very much. And make sure you do get that coffee. So DeFi will be a major factor in the next bull run, or if you can call it that. It's just going to be an arbiter of adoption for crypto big time, along with gaming and other things. Will Ethereum overtake Bitcoin because of this? It's really hard to say. I don't think so. I think Ethereum is always going to do more volume than Bitcoin. Ethereum is always going to have more developer mind share than Bitcoin is. It's always going to enable new products. But I don't think Ethereum's token, the core coin behind Ethereum Ether, I don't think it's designed from a tokenomics perspective to reach the prices that Bitcoin is at. It's just, it doesn't make sense for it to be there. It could. I mean, we saw Ether at $1,000 before, so it's very possible that it will, but I just find it unlikely because I just don't think it's structured that way. Maybe it will out of pure speculation, but that's the only way it would happen. So there's no way to predict, but my prediction is probably not to the level that Bitcoin is. Thank you. ALMAO asks, nice video. I'm not a big blocker. Cool. What's your take on Mimblewimble? Okay. Base level Mimblewimble and the math behind it for privacy and transactions, where basically it's kind of like zero knowledge proofs light, where you are agreeing on shared secrets and aggregations and other things to send transactions in a really like conglomerate way. And in that regard, it's private and where the inputs and outputs came from. Look, I think that, again, like I said, the math is there. The math is quality. I did a huge deep dive of myself on the math, and I'm considering making a video about it, but it's kind of dense, and I don't know that people would even care to watch it. But I don't know that Mimblewimble at scale and in production really makes sense. If Litecoin can take it and really modify and manipulate it to make it work in practice, then that's great. But Grin and Beam, they just didn't really get traction. And so maybe Litecoin will be the one to really make Mimblewimble viable for production level blockchains, production by meaning public. So we'll see. It's hard to say, but Mimblewimble, the math is sound. All right, Crypto Hour asks, question regarding Digibyte that a no-coiner asked me. Who makes core updates to Digibyte? If a person or group does this, how is there not an element of centralization and ability to impact negatively? Great question. This is another example of a lot of other projects out there. Digibyte is interesting in the sense that it's about as close as it can be to Bitcoin in terms of having a community that builds around Digibyte without a figurehead, because Jared Tate, who is the creator of Digibyte, is really hands-off, and actually in news today that actually broke as I'm writing this, list of questions, basically announced he's taking a step back from Digibyte, and he's really not going to be involved in the open source community as much. He's going to be building products with Digibyte. Crazy stuff going on there, but that's a separate story. Digibyte is really an open source community in the sense that normal people who are just passionate about Digibyte got involved and started building for the protocol. I've had Josiah Spackman on the channel. He's a Digibyte ambassador, and I guess he helps sort of scrum and figure out new features, and he helps test. He's been a great resource for Digibyte for a long time for me, and he's another great person to talk to in this regard, because there are boots on the ground people that do this for free, that do this for charity, basically. There are people who mine and use the resources to contribute to Digibyte. And really, it's an open source community, much like Bitcoin is. And yes, there's always going to be an element of centralization, where the centralization of ideas and ideals, people collude together in a positive way a lot of the times, but that becomes a groupthink environment where you don't have this open democracy style, because everyone has similar opinions about where things should go. So the fact that Jared Tate's like stepping away means he doesn't have all the control in the world, and that should show you positively there's not at least individually central control of Digibyte. People may argue that Ethereum is centrally controlled because Vitalik has so much sway, and that's because he's been super involved in all the decision making, whereas Jared Tate really hasn't been, at least publicly. So I think it's interesting. Satoshi Nakamoto being gone is really the first instance where we have an open source protocol with no figurehead, because he disappeared. He, she, it, whatever Satoshi is. And so if you compare it, any project that we have today, to that, it will always fall short in terms of figureheads. So hopefully that answers your question. Thanks. Hunter asks, what should we put our BTC in when it hits all-time high to protect its value when it inevitably drops? Again, this is a personal choice. If you think BTC is going to stay increasing in value long-term, keep it in Bitcoin. Don't move it. Just brave the highs and lows and keep moving. If you want to move profits, I would just pick a percentage arbitrarily. What are you most comfortable with? I cannot give you a magic number by any stretch. Move a percentage into altcoins that you believe in long-term. But again, don't just speculate. Try and put some research and power into what your decision-making process is, and I think that will serve you better in the long run. So I think that that's all we have for the questions. I know there were a lot, but again, there were a ton of questions that I wanted to get to. And before I forget, last episode, I asked folks to tell me the episode and show name that I quoted for a chance to win a BTC prize. And that being said, the randomly selected winner is Clemens Whitman. So congratulations and thanks for supporting the channel. I'll send you BTC whenever I get your address via email. And for those watching, there are always opportunities to win Bitcoin. So make sure that you're subscribed and you stop by every week so you don't miss out on those opportunities. But first, a cup of coffee. Now, right up front, I wanted to touch on Bitcoin, my thoughts after the halving and all that good stuff. So first and foremost, I think it's clear that we did not go straight to the moon after the halving. So I'm glad that's out of the way. Now, I've seen a bit of volatility, but largely Bitcoins look pretty strong price-wise and stable. The real story, though, is in the hash rate and the state of mining within Bitcoin post-halving, with the new reward at 6.25 BTC per block. We saw about a 30 to 32% drop in network hash rate, at least from what I've seen, that came after the halving, which was not only expected, but also counted on. We expected this to happen, and we kind of wanted this to happen. The 30% drop in hash rate likely represents inefficient or uncommitted mining operations who were barely profitable before the halving and have now moved to other SHA-256 chains like Bitcoin Cash, for example, to make more profit. This will, of course, result in lower difficulty level for Bitcoin's proof of work protocol, which will help reduce costs at least marginally for miners that remain. But more importantly, there's now less competition for the precious Bitcoin that's up for grabs during consensus. This means that the remaining miners will have better chances of landing some Bitcoin to pay for their operations. And it's also likely that miners that remain in the network are probably already prepped and profitable post-halving long before now. And albeit they're probably not making as much money as they were, I think they're stable right now to hopefully ride the price up naturally over the next year or so. The hope is that Bitcoin's price does increase steadily over time, making mining increasingly profitable again, and miners will continue to refine the efficiency of their rigs as well to keep mining healthy on the network. Despite what you read online, though, this 30% hash rate drop does not make a 51% attack feasible cost-wise on the Bitcoin network. It's still hundreds of thousands of dollars per hour in compute resources just for a minimally viable attack on Bitcoin, so the cost benefit is not there just to disrupt the network. Overall, we should be crossing our fingers more so for stability than anything else, because I think that will give us a solid platform from which we can move going forward. Now, I wanted to take this opportunity to shout out some awesome opportunities out there right now that you can use to up your cybersecurity game, both for yourself and for your crypto. For those of you who watch my channel for any length of time, you'll know that I preach the use of hardware wallets for your cryptocurrency constantly. If you watch the Q&A, you know this to be true. The rule of thumb, though, is that you want a cold or non-internet connected device that can store your private keys for your cryptocurrency securely. If you trust an exchange to hold those keys for you, not only do you not have true ownership of your crypto, but it's more so an IOU from the exchange saying, hey, we owe you this crypto. Now, you also have no insulation from hacks or other issues like Coinbase going down whenever there's massive volatility. Now, to get around this, some people say, oh, well, the exchange is secured by insurance, so it's okay. But again, there's exclusivities, there's exclusions, there's fine print, and all these things that just make it an insecure way of going about it. The only surefire way is to use a hardware wallet in self-custody. And if you don't have one, now is the best time to grab one for yourself, as there's a pretty awesome sale going on from now, May 15th, until May 17th, which I think is on Sunday, for Ledger hardware wallets. Ledger is doing a 50% off Ledger Nano S sale, which for those who don't yet have a wallet is a great way to secure your crypto for a mere $30. The Nano S is by no means the best wallet in the entire world, but for $30 you cannot go wrong, and if you don't have a wallet yet, it's a no-brainer. Now, I'll leave a link down below with the discount code for the 50% off if you're interested in picking one up, whether as your primary wallet or as a backup to your existing one so you can punch your seed phrase into it and then keep it somewhere safe. There's no pressure here, I'm just sharing this for anyone who might be interested in this deal. Now, on the other hand, with so many people working from home and on poorly secured home networks, I cannot stress enough the importance of VPNs. I use one every single day. Now, for security and privacy reasons, a VPN or virtual private network is an essential. I've done videos recently about this if you're interested. I can link those up, I think, over here or over here. But right now I wanted to talk about an opportunity for a discount on a very popular VPN service, ExpressVPN. Now, I've been chatting with folks over at ExpressVPN, and they've given me a green light to share a special deal for folks watching my channel where you get 3 months of free service when you sign up for a 1-year plan. Essentially, this discount brings the monthly cost of the VPN down to about $7 a month. So again, I'll leave a link down below that will automatically enable that VPN deal that I just mentioned, but there is no pressure. My only intention here is to draw attention to some good opportunities to level up your security and privacy for less money. Whether you use my link or not, whether you buy or not, the real reason I mention any of this is just to keep personal cybersecurity in the forefront of people's minds. Now, for all of you Chainlink fans, I think the most game-changing launch in recent Chainlink history has just made its debut, but it's still flying under the radar. Chainlink just announced the launch of an Oracle service capable of providing verifiable randomness to smart contracts in the form of random numbers. Now, at the surface level, this seems trivial, but this could very well be one of the missing links, pun intended, to the next level of decentralized applications, especially for gaming, which is already picking up speed. So here's the deal. Randomness is critical to almost every functional software, whether it's cryptography used to secure data or to create logic to enable randomized processes like coin tosses or random assignments of resources and all sorts of stuff. Now, in the blockchain space specifically, randomness is the key to secure proof of stake by randomizing the ordering and assignment of block validators, or to create a random non-fungible token with unique characteristics on command, like we saw with CryptoKitties. The issue, though, is that randomness has to be both secure and non-spoofable. That's such a random word, non-spoofable. But anyways, this means it needs to be verifiable, meaning those using an app need to be able to verify that the service is truly random and to be able to verify the randomness of that service. Now, this is incredibly hard to do on dApps because to make randomness secure, you have to generate randomness off-chain in a centralized service where you have a little bit more control and information to work with. But then it becomes super opaque and unverifiable. On the flip side, the means by which you can create randomness on-chain with smart contracts aren't really secure because they rely on semi-ordered parameters like block hash or block height that can be reasonably predicted, or worse yet, manipulated by miners. Now, the Chainlink verifiable randomness functionality works by creating adequately formed randomness off-chain, and then sending a set of proofs along with that random value to a gatekeeper contract on the Ethereum network. Within this contract, the random value and the proof are checked and validated, and if the proofs fail, the random value is not returned, but if it does pass the proofing mechanism, the randomness is returned to the requesting contract. So here's the deal. This model is resistant to manipulation on-chain because the proofing for origin and integrity happen on-chain, despite the calculation of randomness being off-chain itself. In the future, there will likely be a move towards more decentralized forms of this model, including threshold signatures that, without delving into the technicalities, will allow multiple Chainlink Oracle nodes to contribute to secure randomness calculations and sign them as a group in one aggregated signature transaction rather than broadcasting multiple and aggregating on-chain. This makes randomness calculated as a group more efficient, scalable, and secure. I'm telling you, we're going to look back on this as a pivotal piece of groundwork for an essential service within the dApp development space going forward. So I'm super stoked about this, and I'll be testing it out code-wise soon, and I might be able to make a video showing you how it works. Let's dive into everyone's favorite segment, 404 Logic Not Found. Now, for those who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world of technology that might need to get some attention. And speaking of attention, if you want to help get this video some attention from the YouTube algorithm, please do hit that like button on my behalf. Thank you in advance for that. Now, the first story that I want to address here is a very interesting one. Hedera, the company behind the Hedera Hashgraph network project, I guess you could call it, and their new consensus as a service model are pretty interesting indeed. The idea being shopped here is that a private or permissioned blockchain network within an enterprise should not be responsible for its own consensus, but rather it should just track the state of the network and then use the public Hedera Hashgraph network to reach consensus on behalf of your enterprise's private or permission network. Now, there are two huge problems with this. Number one, I feel that this is grossly understating the problems that one would need to solve in order to securely and efficiently outsource consensus, which is the core process behind a blockchain. You have to have a securely shared state channel, first of all, constant connectivity, a public open set of ports, or at least connections to a publicly connected service. Not to mention man-in-the-middle attacks being huge in terms of attack surface. It's not that easy to do, and as of yet, I've seen zero technical specifications for how they plan to do this in practice. Now, secondly, Hedera is not exactly the golden beacon example of decentralized consensus. Their entire consensus model is governed by Hedera, the company, and its big corporate council member group, who are delegates in the network. These big corporations like IBM, Google, and Boeing all own an equal stake in that Hedera corporate entity in a sort of pay-to-play membership structure, just so they can have the rights to drive consensus in the Hedera Hashgraph network. And just having lots of money and just having lots of power is not enough to trust, because I myself, as an individual, have no chance whatsoever of entering into the fray in this consensus mechanism. If the entire ethos of why an enterprise would want to forego their own consensus locally and put it on Hedera is about trust, then I'd say everyone would opt for local consensus over the council that they don't get to choose. Using Hedera, you have to trust Hedera themselves and their corporate council, who basically run the network. You're replacing one trust problem with another, and to that I say, 404 logic not found. Now, I mentioned gaming in the blockchain space before, and I do think that it's going to be a massive element in adoption for cryptocurrency. That said, the famous game company Atari, who's been talking about having their own cryptocurrency token and media ecosystem, has partnered with blockchain as a service company Arcane Network, which, in my mind, will likely be there to provide the necessary node, wallet, application, infrastructure necessary for game studios to integrate Atari's native token inside their games. The details of this partnership are as of yet unclear, but my belief is that Arcane will get business out of it, as game studios will use their infrastructure services as they build their games, and Atari gets to abstract the process of building this infrastructure to partners like Arcane. It's a win-win in my opinion, so I'll be following this one closely. In other news, Coinbase published some really interesting statistics about its users' cryptocurrency trends that I think need some attention. Between 2019 and 2020, Coinbase found that its users' purchase of cryptocurrency on the platform was 60% of the time Bitcoin first, and 40% of the time something other than that. Now, this is interesting at face value because it shows an increasing trend that altcoins are the first entry point for users in the space. And that's likely due to Coinbase's recent move towards listing altcoins in their app, which they haven't done before. And not really as much about increased interest in altcoins themselves. For this reason, that stat's a little misleading. However, of those 60% who buy Bitcoin first, an ever increasing number of people, now less than half, stay only in Bitcoin. And we see a lot more people diversifying into altcoins. Now, these stats might be skewed a little bit because Coinbase seems to always go offline during times of heavy volatility and trading volume, but that's besides the point. What you need to take away from this is that the cryptocurrency space is growing and maturing still, and watching these types of trends for ownership and buying patterns can really drive an understanding of what the future holds for the space at large. Now, speaking of the space at large, and a really large part of that is adoption, I want to mention the Reddit tokenization scheme that's going nuts online right now. Reddit has launched a testnet version of what will be the future of their online reputation and engagement system, their Reddit points, if you will, community points, using ERC20 tokens on Ethereum. Now, each subreddit will theoretically have its own token flavor that it can use for reputation, tipping, and exchange, and more complex use cases like boosting posts, profile customizations, and collectibles. Now, I'm really torn on this, to be honest. First of all, I think it's fantastic. It's a great way to drive awareness and adoption of Ethereum and ERC20 tokens. It's a great way to bring crypto to the mainstream. Great. Reddit's huge. It has millions and millions of users, actually billions of visits, and I love the idea of having the crypto space on there, right? However, I don't think it sets the right precedent because you don't need a blockchain-based token for this, at least for this use case that they have so far. This could be done using traditional tech anchored to a user's Reddit account with no private keys or any of that stuff, which brings me to my next point. This is yet another unique wallet someone has to create. They have to protect it. They have to use it. They have to keep their seed phrase safe. I'm not saying Reddit's dumb or that it isn't cool, but I think it will turn out to be a great product. I just have trepidations about whether or not it will be adopted quickly by anyone except for the folks that already like crypto, because you have to create a wallet. You have to secure a seed phrase. You have to get it. And that's not always a given because we want to spread adoption, so we have to make it easy. And by using the same model that we've always used, it might be hard. So overall, I'm happy this is happening. I'm happy that it's getting the face time and view time that people really need to have with crypto, to be honest. But I'm not sold it will be wildly successful right off the bat. It's going to take time to develop and become something that's user-friendly enough for Reddit to use. It needs to be as simple as upvotes. You need to be able to make an account and just it be done, like it's there. And people then understand, okay, at the core, I understand what's going on. But until then, it's going to be tough. So, as always, folks, thanks so much for watching and supporting the channel. I will link up my favorite Tech Talk Tuesday playlist right here on the screen for you if you want to watch and you have time to stick around. But otherwise, I hope you have a fantastic rest of your day and weekend. And until next time, cheers.